Hello, very good afternoon and welcome to HYCM's Look Ahead webinar with myself, Giles Cochran. Hope everybody is doing well and a very warm welcome as we get ready for the week ahead. Now, the market has started quite unusually, so I'm going to start off the session with a recap, just giving folks a moment to come in to the webinar. If you could just let me know if you can see my screen and hear me okay, that would be super. Just so you know, you can see my screen and you can see what's going on, and I'm giving folks opportunities to come in. Nice to have you, Shwa, Rick, Rajendra, great to have you guys on board, and just waiting as other folks are just coming in. Okay, before we get going, just running through the risk assessment, just making it clear that the whole idea of these webinars are that you can look over the shoulder of someone who has a professional trading background, and you can see how I go about making my trading decisions as I analyze the market. So do take this opportunity to have a look and understand how I go about understanding the markets, and the idea is that helps you guys get ready for the week ahead, so we see the key trading events as they're going on. Just to make it clear, this isn't a signal trading service, it's an education service. So we've started off this week with a strong risk off move. We've seen this come into the market on a number of different factors. We've seen risks really elevating in the market at the moment. Some of those risks have come through the increase in the US election risk that's due in November. We also had COVID cases rising, particularly in the UK, heading towards stricter lockdowns, and the rest of Europe. We have the death of the Associate Judge Ginsburg in the US. That's added to US election risk. And we've also had international banking controversy with HSBC and other large name banks who have seemed to be alleged links to money laundering over the last sort of 20 or so years. So all of that has really hit the banking sector hard, and the general risk tone has shifted. Now let's just take a look at the markets, and I will just run through with you. You can see here on the left hand side, you can see that European equity markets are trading heavily lower on the session. FTSE 100 down 3%, Euro stocks, French 40, the DAX down nearly 3% each. The DAX is over 3% down, and we have the Italian FTSE down nearly 3% as well, and the Athens composite down nearly 4%. So heavy selling day in the stock markets. We also have from the Asia Pac, we had a very negative handover. The Nikkei seeming to hold in green, but remember Japan is on a holiday, so Japanese markets were closed. If this risk sentiment remains, they will open to the downside. So heavy selling on equity space. Can see here bond yields are heavily down on the day. We've got oil prices down on the day. WTI crude down nearly 2.5%. Copper prices down heavily on the day. Iron ore prices down. We also have gold spot down nearly 1.5%. Silver down 2.5%, and this is on that rising dollar. If we just take a look at the currency space, we'll be able to see heavy dollar buying coming into the market. Just moving this up on the 1 hour chart, you can see dollar strength moving up. Next sort of near-term target for dollar buyers is that ascending trend line from here. So looking around that 93.50 is going to be a key area for dollar buyers, and that dollar strength just resulting in the euro US dollar selling off heavily, testing those recent lows here down at that 1.1750 region, key area for euro US dollar buyers. That's really, that strength in the US dollar has come because of the risk off sentiment. Now taking a look at the currency space, we're seeing sort of fairly typical reactions. In the commodity-based currencies, the Aussie, the CAD, the New Zealand dollar, we are seeing weakness across the board. And then we're seeing strength in the safe haven, the Swiss franc, the Japanese yen, seeing strength in those, and the US dollar, which is what we'd expect in a risk-off market. You can see pound has generally been weaker across the board on the rising COVID cases coming out of the UK, as well as the Bank of England increasing the chances of interest rates moving negative after last week's Bank of England rate meeting. Now, the sort of dominant currency that I'm looking at today is a pound-yen shorts. Just looking at this currency pair, you would expect buyers on any retracements higher because of the Japanese yen strength on the risk-off sentiment and the pound weakness on the rising COVID-19 cases, with the UK more likely to head into lockdown restrictions. So at the moment, I'm looking at any retracement back up to that 13460 region. I'm looking at any retracement up to there as an opportunity we'll expect to find sellers. So this region is where I would expect to find sellers on an intraday basis, as long as risk sentiment remains the same. Now, what would change this? What would change this is if there was some negative risk, positive risk sentiment, if there was some good news, good vaccine news, anything that reduces some of this heavy equity selling, that would invalidate this outlook. But as things stand at the moment, any retracement back up to that level, you would expect to find sellers in the current market. So just going now over to back to the main screen. Just run over for you. This is, worth understanding, this intermarket correlation. We are here in this square, okay? So at the moment, this highlighted is the situation we're in. We can see that volatility is higher. I'll just show you the VIX chart. Hang on, let me just, I'll just show you that. Just calling up the VIX chart here. So this is the volatility index. You can see, look, it's really going higher and trying to go higher still. This is the 30-minute chart. So it's trying to push above the highs of 10th of September. So volatility is moving higher. It's a good indication of equity selling. You can see the futures markets just really selling off very, very strongly. You can see that, that heavy selling going into the equity futures markets. Hang on, I just changed the wrong. There we go, that's better. Okay, so that rising VIX, that's the volatility index, and it just gives you an indication of what general risk is in the market. We've seen stocks falling. We saw how heavy the stocks are falling in Europe at the moment and in Asia overnight. Commodities falling. We can see copper, we can see oil, iron ore falling. We've got gold falling as well. We're also seeing bond yields falling, which is rising prices. When yields fall, that's showing that bond prices are rising. Okay, so we've got bond yields falling. So that is a typical risk-off market. And a risk-off market, what we expect to see is the commodity currencies weak. So expect to see Oz, New Zealand dollar, CAD weak. Okay, and then we expect to see safe havens strong. So expect to see safe havens strong, US dollar, Japanese yen, Swiss franc. Okay, so that is what we were expecting to see, and that is what we're seeing in the market at the moment, alongside also seeing some pound weakness on the Brexit, COVID risk, and the end of the furlough scheme in October. So that's what we're seeing at the moment in the market, right? So let's be aware of that. Now, major focus for the week ahead is likely to be the euro. Right, I'm going to go through it now. Just taking a look here, this was the COVID-19 cases increase in Europe from just around August the 15th, so just over 1 month ago. We saw that US cases were sort of over 50,000 and European cases were just under 15,000. So they were just over 10, about 12,000. Now, fast forward 1 month, and this is September the 18th, we can see that European cases are now well and truly on the rise. So we have European cases now above 30,000, and US cases have pulled back but are having a slight incline at the moment. So just to be aware that in Europe, we're starting to see those cases rising. Now, at this stage, when cases were accelerating higher in the US, but lower in Europe, there was a bit of a divergence opening up between the US and Europe. So with Europe containing the virus, that was stronger for the euro. So we're starting to see that divergence meet much closer now. So the US and European cases are now much, much closer to what we have seen previously. Okay, we can see that those case numbers are really quite close together. Now, we also need to look at the Commitment for Traders report. And looking at the Commitment for Traders report, we can see that net longs show that the euro is at record levels. So the recent strength that we've been seeing in the euro is very, very stretched. Okay, so we're just looking here. Just have a little look at the screen. You can see here's the euro US dollar. Now we can see that the euro US dollar is going to hold this channel. And we're now testing this very significant trend line here. We just pull that down. So this descending trend line on the euro is very important, which is this line here, just coming in around that 1.1750. So the euro is at a critical point. As long as we're above this level, the bulls are just about in control. Now we're seeing very heavy selling in the euro today on this dollar strength. So if this level capitulates and falls, that does open up the downside. Okay, so we need to be very, very tuned in and aware of potential downside in the euro. So with all the record longs in the COP position, with the really narrowing difference between the US and Europe COVID-19 cases, there is a potential for more euro US dollar downside in the short term. Now, going back to the other screen, in the medium term, we are expecting euro US dollar buyers. Okay, so there are still buyers expected, but that's not to say we couldn't have a pullback down to that 1.1500 level. Okay, so we have to be very, very aware of what's going on there. And in fact, we've got a nice head and shoulders pattern. You can see you've got a left shoulder, a head, a right shoulder, and here's the neckline. So if we take out those lows here, if we drew technically a line along this neckline here, see there, and we take out that 1.1725 level, that would open up euro US dollar to more downside. Okay, so definitely one to keep a very, very careful eye on going forward. The euro US dollar currency is a big focus for the week. Now, with that being said, we sort of put the context. We're now going to get into the week ahead that we've got coming up. So let's have a quick look at the calendar and we'll go through the week. Now, first of all, first event is Fed Chair Powell speaking. Important. Why? Because we had the FOMC meeting last week and we saw that the dollar strengthened after Powell's speech because he was not considered to be dovish enough. So this is my question. Does Jerome Powell say something to weaken the dollar this afternoon? He would have seen the falling that's going on in the equity markets, and he may decide that he wants to give the market some support. So he might say something about we'll consider future quantitative easing programs, maybe more stimulus, maybe mention something about the average inflation target, maybe mention possibly something about negative interest rates. It's very unlikely, but this is the question. Does he say something to weaken the US dollar? So that's key risk coming up in the next hour and 15 minutes. We also have two other Fed speakers speaking tonight. So this is risk for the US dollar. Now remember, the euro US dollar is called the anti-dollar index. Now if I if I overlay a dollar index on this chart, you'll see why. Okay, look, if I put the, let's just see if I can do that. Okay, let's just going to reload that chart. Right, I'm going to load the dollar index onto this, and you'll see what I mean. But these two, the euro US dollar and the dollar index, move exactly opposite to one another. Okay, so let's put the dollar index here. So this is the dollar index, that's in the blue line. And look, when the dollar index goes up, the euro US dollar pair goes down. When the dollar index goes down, the euro US dollar goes up. When the dollar index goes down, the euro US dollar pair goes up. So here we see the dollar index going up, the euro US dollar going down. So we have this key support level and resistance level here in the dollar index. If that gets taken out, then we can expect more downside in the euro US dollar. These move opposite to one another. Now, the reason that's important is because we have Jerome Powell and two other Fed speakers speaking tonight. So this is important for near-term movements in the US dollar. Tuesday, we have another important speaker. This is the Bank of England Governor Bailey speaking. This will be important for the pound. Particularly look at this if you're trading the pound yen to the downside. Now, the Bank of England announced last Thursday at their interest rate meeting that the Monetary Policy Committee, that the Bank of England has instructed the Monetary Policy Committee to investigate the implications of negative interest rates. Negative interest rates are very negative for the pound, okay? As interest rates go down, that's weak for a currency. As interest rates go up, that's strong. So the idea that the Bank of England may be opening up an opportunity to weaken interest rates is negative to the pound. So if Governor Bailey speaks, and if he kind of is warm towards the idea of negative interest rates, if he encourages what the market's thinking, that'll be more weakness for the pound. However, he may decide to walk it back. He may decide to say something like, just because we're considering how to use negative interest rates doesn't mean that we will use them. So look out for any speech about that. 8:30 a.m. tomorrow, if you're trading the pound, could also produce some opportunities for the pound. Particularly what you want to see is if he further encourages the idea that negative interest rates are coming, expect further pound selling. And pound yen is a good pair at the moment. With the risk-off sentiment, you'd expect more downside in the pound yen. Again, now it's a big week for Fed Chairs Powell. We have a number of different speeches from him. We have him speaking on Tuesday, Wednesday, Thursday, and Monday. So again, big day, big week for the US dollar. Big week, remember how the US dollar influences the euro US dollar. So be looking very carefully at what Powell's speaking during these speeches that come throughout the week. Now, another very interesting interest rate meeting this week is the Reserve Bank of New Zealand. Now, the Reserve Bank of New Zealand has been indicating that they will look towards moving to use negative interest rates next year. They're expected to keep the interest rates unchanged between now and March of next year. But the interest rate markets are expecting the RBNZ to move towards negative. So this is an opportunity for the Bank of New Zealand to either confirm that or deny that. So look out for what they say. If they kind of keep pushing, if they say things like, oh, you know, the economy's still bad, we're worried about unemployment, we are, you know, we're looking towards negative interest rates, then that's negative for the New Zealand dollar. If instead they're more like, well, the economy's recovered quicker than we thought, things are not looking as bad as we thought, then that will be more positive for the New Zealand dollar. The one kind of currency that I'm looking at is the Australian New Zealand dollar currency pair. Now, I'm personally long the Aussie New Zealand dollar, but I'm long from around 1.0880-ish. So I am about 120 points underwater in this trade. I've got my stop running at 1.0500. I'm looking for a move back up to that 1.100 as a first target. Now, I'll show you a little trick. If you, I hope this will work here. Right, there we go. Now, this blue line here is the yield spread between the Australian 10-year bond and the New Zealand 10-year bond, okay? So that's what's here. And as this is called the yield spread, and it's the spread in difference between the two bond yields. So I've got the Australian bond yield and the New Zealand bond yield. As this spread rises, this means the situation is getting worse for New Zealand. So when you see the yield spread rising, the situation is worse for New Zealand. When you see that yield spread falling, it means it's getting better for New Zealand. So in other words, when you have the yield spread rising, you expect Aussie New Zealand dollar longs. When you see the yield spread falling, you expect Aussie New Zealand dollar shorts. Okay, so now we'll put the Australian New Zealand dollar candlestick chart back on, and you can see the correlation that as yield spreads rise, the Aussie New Zealand dollar continues to rise. As yield spreads fall, the Australian New Zealand dollar currency pair continues to fall. So very helpful tool, the yield spread tool. And at the moment, what you can see is the yield spreads between the Aussie New Zealand dollar are continuing to move higher, okay? So as long as these yield spreads move higher, as long as they stay above that 1.0800 level, as long as they stay above this recent swing point in the yield spreads, I'm expecting further Aussie New Zealand dollar upside. So just one very, very careful, one interesting trade to keep your eye on is this Australian dollar, New Zealand dollar currency pair. Now, look at this after the RBNZ meeting. You want to see, so if New Zealand dollar, if they're more negative, then you'd expect the yield spread to rise. And if the yield spread's rising, you expect more Australian dollar, New Zealand dollar upside. So that is certainly one to be keeping your eye on when we have the New Zealand rate statement on Wednesday, September 23rd. Obviously, if there is a surprise interest rate cut, that'll be instantly weak for the New Zealand dollar. So there's some of the things to be looking out for. I really don't know what they're going to do this week. Okay, so we'll look at that. PMI data, this is important for the euro. If the euro zone is seen to carry on recovering well, then that's positive for the euro. So if this comes in above 52, above 52 and above 53 for Germany and France, that will be relatively supportive for the euro. So that'll be important. Traders will be looking at this to see, well, what is the situation with Europe? Is it on course for recovery? Is the manufacturing and services getting back in line, or is it struggling? So big event there. And then in the afternoon rather, we have the US manufacturing and services firm and Fed Powell speaking. So Wednesday is likely to be a very big day for the euro. So euro-US dollar traders, keep a keen eye out on that, and also keen eye on the New Zealand US dollar currency pair on Wednesday. Thursday, SNB monetary policy assessment. Now the SNB have kept their rate, minus 0.75% for years now. Unlikely to make any changes. They're going to just, keep on doing what they're doing. So it's just, okay, it's not. So keep anticipating not much shift from the SNB. The only thing to look at is how they value the Swiss franc. If they keep saying it's very highly valued, just keep an eye out on them intervening, because the Swiss National Bank intervened by buying euros and dollars to support the euro-Swiss franc currency pair. So that's the thing to be looking out for there. So if you're a euro-Swiss franc trader, keep your eye out on that event to see what the Swiss banks say. if they keep indicating there will be intervening in the currency, you'd expect Euro Swiss franc upside out of that meeting. Got Fed Chair Powell speaking and Treasury Secretary Mnuchin speaking. Again, that has event risk. We've got Bank of England's Governor Bailey speaking again. Look out, could be something interesting for the pounds. And we have a quieter close on the Friday. So that's really what we need to be looking out for. Big week for the Euro US dollar, big week for the dollar index, and that's going to be a big week for gold. Now that goes off into our question and answers. Shra, gold sold off before Fed speak. Yes, exactly, Shra, it did. And the reason it sold off is because the Fed's speech was not seen to be bearish enough. Okay, gold traders wanted to see a very bearish Fed, and the Fed wasn't bearish enough, even though they said they weren't going to hike interest rates for 3 years. Now, I took a gold long position out of the Fed because with interest rates not moving for 3 years, that was supportive in my mind, low yields and gold longs. But here's the way I'm going to handle it. Now, I've got my stops running below 1900. You see, we're breaking out now of this key symmetrical triangle pattern. If we get a break and close below this level, I'm going to be closing my gold longs, okay? If we go back into this level, I will hold on to them. So very key position for me personally here in gold. As long as the dollar keeps rising, that's why we're seeing gold weakening. It's this moves in the dollar index, okay? So there's strong dollar moves and the risk off moves. We also see gold selling off when we see equity market selling. So we've got risk off, we've got strength in the dollar. All of that is negative for gold. Now, medium term, I'm still bullish gold, okay? But I'm not going to be holding the trade once this technical pattern breaks. So that's the way I'm playing it. Shwa, CAD yen short due to prices touching on a daily trend line. Well, let's have a little look at that. Okay, let's just quick look at oil. See, okay, gold, oil is weakening, so that is weak for CAD. CAD's a commodity currency, yen strength. So CAD yen short makes sense to me, Shwa, no problem. Let's have a quick look at that. Yeah, and you got touching on a daily trend line. Yeah, I'm with you, Shra. Very, very nice, good spot. I like it. Yeah, so we got that nice break of a daily trend line. Expect further sellers. Any retracement back up to that 79 can be considered suitable for shorting. That'll do it a little bit lower. So any retracements back up to that sort of 79 level can be looked at suitable for shorting. Close, stay below, you'd expect more downside on the CAD yen. So yeah, CAD, I like it, Shra. Sorry, long, no, it's the shorts that make sense. Because you've got risk off sentiment. Now, as CAD is weak because of oil. Now, the correlation is that there's a very strong correlation between oil prices and the Canadian dollar. So when oil prices are selling off, that weakens the Canadian dollar. So right now, the US dollar CAD will be strong, okay? Now we've got US dollar CAD strength because the US dollar is strong on safe haven bids. The CAD is weak on oil selling off. That's where we've got strong US dollar CAD. That's also where we've got CAD yen downside because the CAD is selling off with oil and we've got the yen being bid on the safe haven bid. Remember, we've seen commodity currencies weak. Here, see the weakness in the CAD. And we're seeing the strength in the Japanese yen, broadly speaking. So that's why, Shwa, it's a CAD yen short is the bias for the market at the moment, okay? Now, if risk sentiment changed and we close above that trend line, great, okay? But that's not the scenario we're in at the moment. We still have negative risk sentiment, but looking at all these Fed Chair Powell speeches, that tells me we're in for a volatile week. I'm expecting a lot of, whipsawing price action. So it's a week to be careful and to just keep your eyes open. Yeah, you're welcome, Shwa. You're very welcome. Okay, guys, that's all that we've done. So we're ready for the week ahead. Don't forget, I'm back here on Wednesdays where I do look at the next things that we'll be doing on the Wednesday workshop for clients. And don't forget this program that we do have for people who become HYCM clients. We have this special program to help them. So if you want to find out more, please do get in touch with one of our account managers or email me, send me a message, and I can tell you more about it as well. Okay, everyone, thank you all very much, and I hope you have a very good week. Thank you now. Bye.